SIP has become a most powerful tool. What your that sovereign investor has also told you, right? कि 10-11% growth SIP से ही आ जाएगा. So household savings are moving here, right? And I think it is behaving like 401k in US.
If the market corrects, the SIP volumes can go down. But right now we are talking about 32,000 crores. It is not a broad market. It is a very interesting market that we are moving towards. It is a stock pickers market, right? So in the month of March, there was more than 1 lakh crore of selling.
So what about the taxation in that dividend product you have spoke that you are buying a building and yield product?
The whole of Bombay is getting redeveloped. Right?
Yes,
the whole
right.
of Bombay is instead of going and buying a flat in Bombay, it is much better that you get into where is the money. There is only one way to grow this business. If your past performance is good, people will only see your past performance and give you money.
Welcome to Insights from the Top. Today we have our guest, Mr. Nimesh Shah, who is MD and CEO of ICICI Prudential Mutual Fund since 2007. Under his leadership, ICICI Prudential Mutual Fund got listed also last year, and today it's the most valuable company in AMC space in the Indian stock market. Welcome Nimesh Shah in our series Insights from the Top. आज की डेट में अगर जो निमेश भाई देखें, so since post-COVID, there is a huge retail participation in the market. And that behavior is changing, how it can create an impact meaningfully in the Indian capital market and the wealth which can be created by the individual investors.
I think as far as the impact on capital market is concerned, you have already seen the international investors are selling regularly since last almost now 1.5 years. They have been selling and the market is not reacted as it would have reacted in the past. We don't see a huge drawdown of the market despite so much selling, right? So in the month of March, the kind of selling that has happened. Still the market has not reacted. So the mutual fund industry becoming bigger and having the counter flows. There are two reasons why there are counter flows. One is that retail investor, if you see the month of March when the maximum FII sell was there was more than 1 lakh crore of selling. So March is a very good example. There were more inflows. The Indian investor has graduated. He believes that markets in the long term will give him return. Indian industry will give him return, and this is the only way to beat inflation. So he is coming into equity markets for the long term. That is seen from the behavior. The people are tracking 3 to 4 years and nobody tracks 1 year or less than that. That is already shown by the behavior. So if you see the month of March, not only there were new purchases, but say like an AMC like ours, 1/3 of our equity assets are actually now dynamic asset allocation assets. So since they are dynamic asset allocations, at any point of time, when the market is correcting, we know that ICICI Prudential will be buying big time. So as a thumb rule, I know that if market is falling by 1%, then we know that we'll go out and buy in 4 digits in the country. So that's the kind of volume that we are talking about. So there is a natural hedge created today that the FIIs, maybe we have given them a respectable exit, which was not there in 2011, 12, 13, 14. You know how it used to happen if the FII market would correct big time. So to that extent, Indian markets have become stable. There is one steady flow coming from the Indian investors who are looking at long term. And as far as the investors are concerned, look at the maturity of investors. Last 1.5 years, market has not given return. Right? I don't see, when I travel across the country, I don't see retail investor. They are clear that they have invested for 5 years. They were very clear that they have invested towards a goal. And the SIP figures don't matter. Right? The SIPs continue. Everywhere I go, people ask me about the SIP number. We recently did an IPO. And every investor I would go to, everybody was concerned about SIP numbers. And very clearly I told them the SIPs can correct. Means they are 30, at that time they were 28,000 crores. And I said that yes, 1.5 years there has been no return and the market can correct. And if the market corrects, the SIP volumes can go down. But right now we are talking about 32,000 crores. Right? So there will be a decrease in the increase, but the stability is quite good. And it has given a stability to the market also.
So what you mentioned, Nimesh bhai, like that we have got a huge inflow in the month of March. At our individual level also we have seen in the March that our inflow was 100 or 150% more what we have saw in the February or
Correct.
January when the market was doing well. So definitely all the investors, they are looking for a long term. कि आज की डेट में कोई भी इन्वेस्टर्स आता है तो they don't see 3 years, 5 years. Always their horizon is more than 5 years. And what you have mentioned about the dynamic asset allocation category, so you have a natural hedge that you can, whenever the market falls, you can go and buy in 4 digits crores. So how you see these dynamic asset allocation product or a multi-asset allocation products over a period of 5, 7, 10 years? Is this a comfortable situation for a client investor across the market cycles? How it can help investor?
So let me give you an interesting story. We started this category in India. So this was 15, 16 years back. We used to call it volatility advantage fund. Right? I was in BKC. It was a very BKC kind of name, a very investment-centric name. I love, as an investor, I love volatility because volatility gives you opportunities to invest at good prices. So volatility in my mind is an opportunity. Volatility in the investor's mind, or the American books have taught us that volatility is a risk measure of risk. Right? I look at volatility as an opportunity. So I named the fund Volatility Advantage Fund. And frankly, the fund won't sell at all. I went to Ranchi and I was talking to a biggest distributor of Ranchi and he said, sir, आपने अच्छा समझाया, मैं खुद डाल दूंगा पर कस्टमर का पैसा नहीं डालूंगा. मैं बोला क्यों नहीं डालोगे? बोलते इसमें तो नाम खराब है, नाम वॉलेटिलिटी है, वॉलेटिलिटी में पैसे नहीं डाल सकते. So what I perceived sitting in BKC to be a very good name because you make money out of volatility. Market goes up, you sell, market goes down, you buy, and mutual fund is a tax-friendly environment where there is no profit on the trading. So it's a very good vehicle. Right, which helps you give an absolute return. So this is 16 years back. We named it Balance Advantage Fund and the category took off. Now look at the fund, what it has done over the last 15 years before we talk about what it can do in future. We are very clear that Indian markets, even though long-term direction will be up, will continuously go up and down. And the volatility will be much higher because there are various uncertainties. There were uncertainties in 2011 also, 2013 also, 2015 also, 2017 also. The kind of uncertainties will change. Today we are talking about that AI is an uncertainty. We are talking about oil is an uncertainty.
Yes.
So at any point of time, you have been in this for long enough, there will be two sets of uncertainties that we can talk about. So I feel that in a volatile market like India, it is always better to, with equity, if you mix some debt, from a pure equity investor also, it is, and what it has done in the last 15 years, if you see what has in the last 15 years, what has been Nifty return. Nifty return has been some 11.6.
Yes.
Or 11.1 has been the Nifty return. A lot of people don't appreciate risk-adjusted return, but you are a knowledgeable person. You understand risk-adjusted. By taking 50% equity, if I have given more than Nifty return, 100% return with 50% equity. The risk-adjusted return on that product is very high. Right? So it is one of the best products that is possible for the common man in India. We had originally thought that the common man of India would not be ready to take volatility. So it is a product created for the common man. But we have seen a lot of HNIs because HNIs are in the business of wealth preservation.
Yes.
They would rather have lesser risk and get a decent return. So now we have created a whole category. We are believers. 1/3 of my equity asset is in this dynamic asset allocation. We call it dynamic. Within that, we would have given a name. So there is something called equity and debt fund. It would have 75% equity. Then there is something called multi-asset fund. We have got balance advantage fund. It would have 53% equity. We would have asset allocation fund of fund. Right? Or it is called dynamic asset allocation fund of funds or something like that. Again, around 50% equity. There will be another one fund at 35%. So we have created a whole segment with different levels of equity. Based on the conservativeness a person can come in. So then there is no question of you as an advisor. There is no question of timing. How much volatility can you take? You can estimate, or you will have your methods of knowing how much customer can take volatility, how much is his risk-taking capability. Based on that, you can suggest a product with 15% equity to 75% equity.
Yes,
right?
yes.
So according to me, this is the way India should invest in a volatile market. We have all our aggressive products, but this protects the downside quite well. And in the long term, as investors who protect the downside better are the ultimate winners. So we have always loved this asset class, and we will be pushing this asset class. I see this from 1/3 of the AUM, this becoming more than half of my AUM.
Same with our company also. I think we met first in 2012-13, right? At that time, you have suggested that Hitesh, you focus on some balance advantage fund with a 3-5 year horizon, and lot of FD money can replace it. At that time, we have tried hard. We got some 5% allocation of our entire AUM, but today almost 30%, almost you can say 1/3 of our AUM is in a asset allocator funds like a multi-asset fund or balance advantage fund, or then one we missed, that equity savings fund also. We have a huge allocation. So it's a risk adjusted return. A common investor के लिए बोलो तो at what speed you are driving, that matters. At what time you are reaching, that is doesn't matter. How much risk you are taking at the time of driving.
Very well put. I should have put it. It is very nicely put.
So if I'm going to Pune, someone says I reached in 2 hours and he has drove at a 200 kilometer. I have drove at a within speed limit of 100 and I reached in 2 hours 15 minutes. So I am in a better position. I have taken a lesser risk.
So I think you explained the risk adjusted return in a much better way than I have been able to do over the last 15 years.
Thank you, Nimesh.
So I'll use this example a lot now.
So Nimesh, how do you see the current market, right? Because it has corrected from January peak around 10-15%. From September 24, I think last week of September market has reached around 26,200 Nifty and 86,500 Sensex. So from that level also we are corrected almost 10-15%. And since last 2 years, if you see, the market return is zero, right? So where you see this market and where you see the value in the market?
Hitesh, at that point of time when September 24, we are actively telling people, do not invest in equity, get into hybrid funds, get into balance advantage. Balance advantage fund at that time had 35% equity. Today it has 53% equity. At that time it had 35% or almost 30% equity was there. So the way we look at the markets today, right, while we are more comfortable today in investing than what we were in September 2024, we are given a clear sell call in even before September 24. We didn't wait for September. If you look at what we had said in March 24, our yearly write-up, we had said that the markets are overvalued. So what has happened? Let's just trace out what has happened in the last 2 years. Why we were growing till September 24. Ultimately, market follows EPS. So if you see post-COVID, the earning per share of our companies was growing very well. If the earning per share of companies is growing well, they get a good PE ratio also, because the people believe that the future is going to be good. When if that belief is there, the PE also goes up. So earnings were going up, PE was doing well, everything was going well for India. So the base thing is earnings. Then the government came into power in May 2024, and they are a fiscally very prudent government. Right?
Yes.
They won't spend more. So there was a huge control on spending by the government. The private sector spending had not come in and government controlled the expenditure. RBI also got up and said there are too much personal loans in the country. Maybe that is going towards the market, futures and options it is going. So a lot of NBFCs were controlled. Banks' personal loans were, the risk weightages were increased. RBI has its own ways of controlling the banks. So they did a job on that. With the result, on one side, the liquidity in the country reduced, the consumption reduced, and that impacted the prices. Now you have got an overvalued market, hype market, and earnings are not coming. So what will the world do? And the rest of the world is much cheaper than us. So FII started removing money from the country and investing abroad. Into Korea, into Taiwan, into various other countries, they started investing because the money will seek where there are growth opportunities, and India was not growing. So the issue is not with the market, the issue is with the growth, right? If the growth in earnings is not there. So what has the government done? Government has done all the right things in 2024. They have given away more than 1 lakh crores in direct taxes. Government realized what is the issue.
Yeah.
So they have given more than 1 lakh crores in direct taxes. They have given more than 1 lakh crores in GST. Right? The RBI has, now that the personal loan has been under control, the controls have been simplified. right? So there is a push for that also. So there is money in the hands of the. So things were again started looking up, and we had the month of March where the war happened, right? Parallelly with the war, the AI uncertainty has come that the rest of the world has got AI companies. Does India have a play in AI or not? So these are the two uncertainties that are looming on the market. And with that uncertainty, I believe at some point of time, it's not the war, it's more on the oil prices. To what extent are the oil prices going to remain up? Long term, we believe oil will behave, right? Because there are too many alternates that have come in place. So long term, we are not worried. Next 1 year, there is a concern that oil prices impacts everything in India. With our import bill of around, it can affect our GDP or our current account deficit by 1.3% if the oil remains in that order. That can impact our interest rates also. RBI might be, there might be a scenario where interest rates can go up. So we have those uncertainties in the country today for the short term. Right, the 2026-27, nobody knows right now because nobody knows till what time oil is going to remain above 100. Oil has to come below 100, and in the medium term we are quite okay. In the medium term, we are not very bullish on the oil prices. There will be tremendous supply of oil, and we are not that concerned. But nobody knows how the war will go and what will be the impact of war. To that, 26-27 uncertainty will be there. I believe earning correction, already the prediction of earnings have already reduced. I think they can get corrected further for the year 26-27. But market will quickly see, as soon as the stability comes on the macro environment, on the geopolitical side, market will quickly see that what will be the future oil prices. Based on that, what can be the earning momentum. As far as the industry is concerned, it is not a broad market. It is a very interesting market that we are moving towards. It is a stock pickers market, right? You can't say that we'll invest anywhere and we'll make money. Right, a lot of things when the FIIs sell, one should see when the FIIs sell, what has got corrected the maximum. So the most easiest thing for a FII to sell is the banks. The major banks of India are the easiest to sell. If you see the kind of opportunities that is sitting over there, right? One of the biggest franchisee in the country, one of the most respected franchisee in the country, because of some uncertainty in the management structure or whatever, it has got corrected. I've never seen that such a premium franchise in the country corrected to that extent. So if you can wait for 3 years, right? If you can wait for 2 years, then it can be a very good opportunity. So we see opportunities in some pockets. You have to see what has been oversold in the market. And at some point of time, FIIs will come back. These banks will be the first that they'll buy also. Because what else they will buy? If they're not buying IT, they have to buy something else. Yeah, and what is the easiest to buy in this country will be the broad-based big banks, right? So they are a good business. No bank is creating NPA. When a bank does not create NPA, it does well, right? There will be other macro environments which might impact it. But as long as you are lending and you're getting your money back, a bank does okay. And the NPA creation in this country is minuscule. The kind of credit systems that have been put in place both in the retail has been very nice. Another energy, right, for whatever AI and whatever the application of AI and whatever we are talking about, anyway, the kind of power consumption in the country is a very a good opportunity for a lot of energy stocks. So energy is another space that I would love. Think about global cyclicals. Right, if you see the global cyclicals and if you see the way the metal are there, I think some of the metals are getting into a super cycle. Right, so I think they have done well, but I believe they can do well in future also. So the entire capital goods industry, the energy, so whatever is facing the consumer, right, I may or may not be that bullish on it because those companies are at a very high PE also. But whoever is supplying to the consumer, so we love steel producers, right? So between 2016 and 2020, the consumer companies were doing well. But now if you see the last 3-4 years and I see the coming years, I believe the capital cycle in the India is here to stay. And I believe manufacturing in India is too important for the country. Exports will do well where rupee is gone. So you see what has happened in the last 3-4 months and based on that you build your portfolio. So with rupee where it is, export also can be a good opportunity. So exports, banks, capital goods industry, energy, other various areas. Look at a commodity like cement, anything to do with real estate. right? I think we can do well in this country.
So you are rightly said that in 2024, right? In your yearly bulletin, you have mentioned that market is expensive. That has saved us and our investors also, because I remember in 23 or 24, I have heard somewhere or in a con call Mr. Naren, right? So from that day, we have taken lump sum money only in the multi-asset allocation fund. All other funds we have taken a 12 months STP compulsory, right? Ki whatever money comes, take a 12 months STP. That has saved clients also. And what you have told that asset allocation fund, that plays a very big role in the long-term wealth creation. So today, that industry since last 5-10 years, we see it has grown like anything, right? Where you see that in a long run or next phase of growth, from where it will come?
See, as far as the industry is concerned, there is no need to do too much macro analysis. Banks in this country have got 250 lakh crores. 10 years back, we were 10% of the banking industry. Today, we are, as an industry, 1/3 of the banking industry. So, as a country matures, as the saver matures, the savings get converted into investment. The saver of yesterday, the depositor of yesterday, is becoming an investor of today. Right, so the banks also intermediate, we also intermediate. Bank intermediates between the borrower and the lender. We intermediate between the investor and the investing companies, and we charge also customer very less. So this industry is doing very well because SEBI has done a brilliant job of regulating us. We are doing well because we charge customers very less. Your customers are charged so less, right? To get a whole full-fledged, I've got 50 people doing in my equity teams. Mm-hmm. All their expertise, they are getting at such a nominal rate of, so this is the product where customer is very transparently told that this is what you will be charged, and based on this charge, and they are getting a good risk-adjusted return. So they have experienced that. Why mutual fund is not a push product and a pull product today. From when you started the business, it was a push product. You were to explain customers a lot.
Yeah, right.
Today, you don't have to explain mutual funds. You only straight go and talk allocation. So the industry has done well because, one, it has been regulated very, very well. Second, it has positive experience for the customer. Third thing, digitization has been done very well. I get maximum from interiors of Bihar and interiors of UP. We get a lot of SIPs in, right? Because those people, so availability of the product in the interiors of India, that has also changed. So, and we have moved from 1 crore customer to 6 crore customer in the last 6-7 years, right? Going forward, look at these people, all these young people who have come in. Over a period of time, they will have more and more wealth. There is a bank deposit figure of 250 lakh crores. We are only 80 lakh crores, right? So this industry, as long as we don't goof up for the customer, and customer makes decent returns. And by decent returns, I'm saying double-digit returns. Most of the customers would be happy if they get double-digit returns. Yeah. See, India, we are blessed with a growth rate of 6 to 7%, 3 to 4%, 4 to 5% inflation. So you're talking about 10 to 11%. The nominal growth of the country is 10 to 11%. If the nominal growth of the country is 10 to 11%, maybe we give 1% more. The top companies of India will grow at 1 or 2% more than that. So you're talking about 12 to 13% top companies of India can grow. And ultimately, market follows the EPS. Yes. Right? If there is EPS growth, markets will grow. So I am very constructive because India is growing at a nice pace. And with this industry will only reflect the growth of the country. So we have been growing too well over the last so many years. So one of the sovereign funds was following up big time with me. As soon as my IPO was announced, he was following up big time with me. So I was wondering, why is he following? I should follow up with him. So he said, no, where will I get an industry in India, right? Where you are sitting on 7 lakh crores of equity. Mark to market, right? If the AUM goes up, it is true for your business also, for our business also. Every year, if 10 to 11% the market grows, will grow along with that, right? And second is that SIP itself gives me a 10% growth, 9.5% to 10% growth. The mix of 20% growth you are talking about, right? So so we have to ensure that our investors get a good experience. And we don't goof up the risk management. So I always say that I run ICICI Prudential Risk Management Company. With the kind of EAM we have to manage risk well. If we manage risk well, we'll do well.
Good. Very well explained. Just you have mentioned that 10-11% is the nominal GDP growth, right? And corporates earn more, 1 or 2% more. So 12-13% growth is very easy. And you have mentioned that ICICI Balance Advantage Fund also last 10-12 years return is around
15 years, 10 years, everywhere.
It's a 12%. So by having a 50% equity also the 12% return is there. So definitely.
So and this becomes better with SIF.
Yeah.
SIF is what SEBI has introduced now. It gives us so much flexibility. If BAF we had flexibility, this is better. BAF is Balance Advantage Fund. This is better. ICICI Prudential, all this SIFs, that asset allocation SIFs that are coming up with, this is a fantastic product for the customer because I have got huge flexibility how much equity I want to put. I can put REITs, I can put debt. I've got the flexibility. I don't have to put arbitrage also over there. So I think SIF is a much better structure to do this dynamic asset allocation. I think SIFs will grow.
Since you have mentioned SIF, that is alternate investments, can you focus more on the SIF? What investor should look when he's investing in the SIF, or what type of SIF he should choose?
I will talk about SIF and alternates both.
Yeah.
Right.
Please.
So SIF gives the fund manager more flexibility. The use of derivatives in SIF is more than the use of derivatives allowed in mutual fund. We as a company have been using huge amount of derivatives because we have got volume, and with volume, even if we sell in future, we don't sell in cash markets, right?
Mm-hmm.
The impact is lesser on the price.
Right.
So we have always been using a lot of derivatives. Our balance advantage fund, all these hybrid funds have used a lot of. So this gives us much more flexibility. So SIF, you can say, is mutual funds with much more flexibility to the fund managers. That flexibility has to be used very responsibly, because it can counter this one also. So over a period of time, I believe that we will show a good track record on SIFs, and then I think that segment will grow big time. So that is one. Another area that we have focused big time, and I would like to talk to your investors about that, is the alternate space. Right, the alternate space is a very important space because you would have retail customers also, you will have HNI customers also, and as I understand, you have got a lot of HNI customers.
Yes.
In addition to investing in equity, as AIF and PMS, that is what we do in alternates, is a very important segment for your investors because the HNIs may be ready to play more concentration risk. Typically in a mutual fund, our target segment is the retired school teacher. We want to protect his wealth. We don't want him to lose money. So the risk diversification is also more. The diversification is also more. Maybe your customer wants a concentrated strategy. Maybe वो बोलेगा कि मुझे केवल 30 stocks चाहिए. ये 50 stocks, 60 stocks मत करो. High conviction stock करो. Or maybe he says that take more active share. Mutual fund में मेरा धर्मा है to beat index.
Yes.
My dharma is to beat index. So we follow that dharma in mutual funds. In alternates, I can take more risk if I think it right at that point of time. I can go away from the benchmark. I don't have to go near the benchmark. In mutual funds, we control that. In my risk management, we control how much a fund manager goes beyond the benchmark. Here, we give more leeway to the fund manager to go play what we call technically more active share. Right? He can take more risk in terms of more concentration risk he can take. He need not be near benchmark. So maybe your HNIs for wealth creation, maybe they would like to diversify into that. So PMS is a good way of looking at it. And if you hold, mutual fund is a very tax-friendly product. The argument for PMS AIF is that it is not as tax-friendly. I agree it is not as tax-friendly as mutual funds. But if your style of investing is holding for more than a year, then PMS AIF is also okay. Right? So if you are holding for more than a year, then there is no difference between a mutual fund. The final taxation would be the same because if you are holding more than a year. So that's where, and then you can go into different asset classes. I'll say we have got a very simple product. It is a real estate. We have diversified into real estate also. We have been doing it since 15 years. So in real estate, we have got yield fund also. Right, where you buy out buildings like the ones that we are sitting in. A-grade buildings you buy. The buildings are already given out on rent. The builder has made the building, a nice glass building in Bangalore, Hyderabad, Pune, Bombay, Delhi, wherever. Now, look at the risk in this. The building is already standing.
Yes.
There is no construction risk of the building.
No developer risk.
No developer risk. Today I buy also based on the yield, and if my rentals are more, I'll get more value also.
Yes, definitely. Yeah.
So I think risk adjusted, it looks like a brilliant product for your investors. So one should. We are also into private equity. ICICI Prudential, we have taken the private equity arm of ICICI, which was separate. We have bought out, the fund management team is with us. This one is. So right from liquid fund to private equity, real estate funds, but the whole of Bombay is getting redeveloped. Right?
Yes,
the whole of
right.
Bombay is, instead of going and buying a flat in Bombay, it is much better that you get into where is the money? The money is in the redevelopment of the place.
Yeah, it's
right?
in
The
the
builder
business,
is making.
yeah.
So we are partnering with the builder to create a redevelopment fund. Right? And these are the top builders of Bombay. Top builders of India, we are partnering with them and creating a redevelopment fund. So there are various areas that HNIs can get. The minimum sizes for all this will be 1 to 2 crores. And I would recommend only people who can do a single shot to come into that. The risk might be slightly higher, but the return also can be good. And it might be different asset classes like real estate. Maybe an investor like me has moved my debt exposure towards real estate, big yield fund, because it is a much better yield that I can get out of that.
So what about the taxation in that dividend product you have spoke that you are buying a
the
building
yield
and-
product.
yield product.
You asked the right question. So when you leverage whatever rental you get, you would have to pay the full tax on that. But you have taken a loan against that.
Okay.
So loan, you pay interest on that. So on your P&L side, there is a self-occupied property. You're a chartered accountant, I guess. So there is
I'm not a chartered
You're not a
accountant,
chartered accountant, but there is a self-occupied property. There is a 30% rebate over there.
Yeah.
Right. So if you get rent, right, which has to be taxed, but there is a rebate, then you have leveraged on that. So the amount of tax that you pay, marginal tax, is very less. The amount of money that you pay marginal tax, most of it will become capital gain.
Okay.
So you will get by the way of capital gains 5 years down the line. So then again 12.5 plus whatever is the
which is
surcharge
the
and all
equity taxation,
is the
well.
equity taxation you move towards. So the whole game is to move towards capital gain tax. So it's a very well constructed product. I would urge your investors to look at it.
So when investor redeems the money after 5-7 years, then what will be on his tax part?
He'll
taxation?
get more or less a huge quantum will be capital gains,
Okay.
but some amount will be also in marginal tax.
The marginal
It will be a
tax,
mix,
right?
but it will be a very small quantum. I believe on an average, including surcharge and all, will be around 20%. But
Right, so-
you should get it checked.
So it's a very interesting product which I didn't knew. So definitely we will look at it also. So SIP has become a most powerful tool. What that sovereign investor has also told you, right? कि 10-11% growth SIP से ही आ जाएगा. So household savings are moving here, right? And I think it is behaving like 401k in US, SIP, right? So how you see this SIP
For
flows,
the retail or for the HNI investor, it is more of averaging. Right? Whether it is giving stability to capital markets, that's a different angle. From your customer's angle point of view, they are averaging out the cost. So it's good for them that if you are in an uncertain market where you are not sure, you can say, instead of investing today, I always say, either you invest in any of the dynamic asset allocation products, because we will mix, then you don't have to worry about timing. But if you are going for a full equity product, it is better to do an SIP or an STP.
Right. So if you have to give one advice to the investors, right, an existing investor, an investor who is willing to start his SIP or lump sum amount in the market, what will be a one piece of advice for a long-term wealth creation?
I think your investors are very smart people, and the young investors coming in, they are more well-read. I think they do a lot of research themselves before they come and talk to us. So I think it's a very smart generation. I don't believe in giving too much advices. Right, because when you give free advice anyway, nobody listens to you. But I think it is good what the young generation is doing. So study the products well and then invest. We understand the risk very well before they invest. Understand the uncertainties very well before they invest. Because there will be risk, there will be opportunities. Right? So please understand the risk very well before they invest in any of our products. So ICICI Prudential is very comfortable explaining the risk to people. So we are very comfortable explaining our products more to people so that they do the right understanding. And with an advisor like you, they are safe, because I am sure knowing you since so many years, you would disclose the risk first. right? So
Yeah.
it's a very healthy thing to do. I know you since so many years, so I know that the first thing that you will tell a person is that this is the risk involved, and if the risk plays out, then we can earn this. So that's
Thanks.
a good
You know better than my clients.
uh.
Right? You are, Nimesh, amongst the most successful CEO in a BFSI space. Since what advice you can give to the youngest leader?
No,
Aspiration.
everybody
Yeah.
is smart. I don't want to give any advice to anybody. People are very smart. They know, and the smaller AMCs are growing very well. So they are very smart set of people, and everybody is doing well for the customer. Anybody who has done well, this industry is very beautiful. The way SEBI has regulated it, you grow if you manage money well. There is only
Yeah.
one way to grow. There is no other way. You can have the best sales and distribution, you can't grow this business. The only way to grow this business, if your past performance is good, people will only see your past performance and give you money. So the only way to grow is that to show, and we have grown from say 15,000 crores to 7 lakh crores today, right, in the last, and it is, if you continue to give fund performance, then only you can grow. There is no other way to grow. So we focus only on that. This is not a sales-centric company, though we might have got a good sales force, but it is an investment-centric company. AMCs should be only investment-centric. Sales will happen automatically.
So that matches our mentality also.
Correct.
In our company also, we have total team of 70 people. Out of 70, 50 people are only servicing the clients. Only we have a 15 people in sales and 5 in the back office, like accounts and everything. So you're rightly told that we also have AUM in 2013-14, we had a 40 crore AUM, and today we are managing around 2100 crores of AUM. So that customer service, that's you rightly pointed out.
Correct.
Instead of being a sales-centric, become a customer-centric, then you will grow, definitely.
Correct.
So thank you very much.
Thank you.
Nimesh bhai, for your valuable time and valuable inputs and a very good discussion about the SIF and alternate and asset allocation funds also, which most of the people are not aware of that or they are neglecting.
Correct.
Yeah, thank you very much.
Thank
Yeah.
you. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.